Time for business now. Kate Moody joins us, starting with a major blow for the manufacturing sector in Northern Ireland.
Absolutely. The Canadian plane maker Bombardier is closing down its operations there. Bombardier is Northern Ireland's biggest employer with some 3,600 workers. Thousands more jobs across the region depend on supplying the site in Belfast. Thomas Waterhouse reports.
It's bad news for Belfasters as a central pillar of the city's economy and industrial heritage collapses. Northern Ireland's biggest employer, Bombardier, has announced it's shutting its hangar doors on the banks of the Lagan for good. The Canadian aerospace giant is selling the plant, as well as its site in Morocco, as part of a wider restructuring and cost-cutting initiative.
As the company moves to optimize its global manufacturing footprint, Bombardier will pursue the divestiture of the Belfast and Morocco aerostructures businesses. These are great businesses with tremendous capabilities.
Back in November, the plane and train maker had already announced it was cutting some 5,000 jobs internationally, with 490 axed in Belfast already. A further 3,600 Northern Irish jobs are now at risk. Trade unions have expressed their shock, with the GMB saying its high-time workers were treated with the respect they deserve. Bombardier has, however, promised to remain committed to finding the right buyer for the site. Until then, it plans to focus on its remaining plants in Montreal, Mexico and Texas.
A French court has given approval for British Steel to buy the ASCOVAL steel plant in northern France. There have been months of protests over the factory's fate. 270 jobs had been at risk, and unions were quick to welcome the court decision, which is expected to see the site continue operating. British Steel was formed from a division of Tata Steel, which was sold off in 2016. The acquisition gives the company a stronger footing in Europe. The Bank of England has slightly upgraded its economic forecast for the coming months, while keeping interest rates on hold at 0.75%. It was the first policy meeting for the central bank since the agreement to extend the deadline for the UK's withdrawal from the European Union to the end of October. Policymakers say they now expected GDP to grow about 1.5% in 2019, rather than the 1.2% previously forecast. Governor Mark Carney said that if the Brexit deadlock is broken and the economy performs better than expected, he could support more frequent rate hikes. The bank also said that ongoing Brexit-related uncertainty had the potential to hit the business community hard, underscoring the shadow cast by the impending changes. Let's check in on the day's trading action now. The British pound fairly steady after the bank's announcements. London's FTSE 100 dropping about 0.5 percentage point there. The CAC 40 was sharply lower here in Paris after data showed a contraction in factory activity across the Eurozone. The DAX only slightly bolstered by Volkswagen shares. They were up about 4% after quarterly results, which were in line with expectations. Well, Wall Street's trending down a day after the Federal Reserve said it would hold its interest rates steady despite encouragement from Donald Trump to cut them. The Dow Jones losing over 200 points this hour. It's down about 0.8%. The Nasdaq and S&P 500 about half. Well, oil prices have also dropped sharply this Thursday. We're seeing US WTI tumbling as much as 4%. It's trading down about 3.5% now at $61.37 per barrel. International Brent at about $70.15. This as the Trump administration formally ended the waivers which had allowed some countries to continue buying oil from Iran. China, India, and Turkey are among those who will now face U.S. sanctions if they don't end their imports. The sanctions were reimposed in November as Washington seeks to block Tehran's crucial energy sector. Tesla is hoping to raise some $2 billion in a fresh offering of stock and debt on the markets. Last week, the electric car maker revealed losses of more than $700 million and a shrinking cash balance in the first quarter as sales tumbled. Founder and CEO Elon Musk says he still believes the firm will return to profit in the coming months. He himself could buy up to $10 million worth of new shares to underscore his confidence in the brand. Tesla shares jumped around 3%. Well, France and Germany are powering ahead with their new alliance to develop batteries for electric vehicles. The €5 to €6 billion project is designed to rival market leaders in Asia and the United States. It will receive the bulk of its financing from private firms, including car makers, as well as €1.2 billion in public subsidies from the EU. Finance ministers meeting in Paris said it was a crucial step towards marking European independence and leadership in the technology industry.
By gathering Europe's technological, financial and industrial powers, it allows us to be competitive in the face of China or the United States.
We want to do more than just cover the demands of the European car industry. We also want to export internationally on the world markets. And by this, make clear that batteries made in Europe are going to be an important quality standard.
All right, so the beginning of a pretty large-scale project for Europeans.
Kate, thank you very much indeed. Kate with all the business. Great to see you. Let's cross the studio. Don't go away, Kate. Sports